Hello, traders. It's Friday, August 4th. We're about 2.5 hours into trading. Let's get right to it. We start every video with a review of our previous pick so that you can see how it did. Then we do market analysis, and then we take a look for a new pick. I'm going to be taking some time off. For those of you that are able to, I suggest that you do the same thing because the news is going to dry up after today. The volume's going to dry up. And the middle of August tends to be vacation time for a lot of traders. So that's what I'm also going to be doing. And we had major news the last 2 weeks. So I'm going to cover that very quickly as well. Currently, we've got the market trying to break out to a new high of the day. We want to see this breakout hold. And then if we can add to it, we've got a chance to have a decent run higher the rest of the day to finish the week. So let's take a look at our last pick. Yow. What a stinker. So, a couple of things happened this week. We're going to get into that. We're going to get to the concept behind the trade. What I was looking to do is to sell some out of the money puts naked to acquire the stock. Still like the strategy. No problem with it at all, but I'll tell you what went wrong. So, the stock was somewhere in this $12.50 range or so, and we were selling the $11 out of the money puts. The reason that I liked the stock was because it had been breaking through all these major trend lines, and it was post earnings, and it had extremely heavy volume. So the market was supporting that move. As we zoomed out, we could see that this was a longer term breakout. Loved all that part of it. It also carried very high option premium. So you've got this nice technical breakout. They liked the earnings report. I looked at it, and the only concern that I really had with it was that it is a very speculative stock. That in and of itself is not going to keep me from doing the trade, because when I see this type of reaction after an earnings announcement, my instant thought is, will the stock be able to hold this breakout and this support? At the time that I put the trade on, I sold the $11 puts for 30 cents. So I'm a willing buyer of the stock at $10.70. Okay, so now we get this big drop, which was unexpected on Wednesday. That was the Fitch downgrade of US debt from AAA to AA plus. The entire market sold off. Any stock that had been in rally mode sold off. Okay, didn't expect it. Was looking for a very quiet week this week. We're getting a little bit more into market analysis. So, okay, I'm still a willing buyer of the stock. I really, I don't care. This is a little market volatility. I can weather that. It's not really changing my opinion of the stock. But then we got this big overnight drop yesterday. What the heck happened? Where did all of these buyers go? They vanished. Well, the reason is because we got some news Wednesday after the close. Again, completely unexpected. The company decided that they were going to issue more shares, 7% more shares. That is dilutive. That means that each shareholder's worth is smaller. So the stock pulls back on that news. Plus, the timing of it was also a little bit suspicious. And so that is why the stock dropped like that. Well, in here, I'm not expecting that type of news. I'd read the earnings report. They said that they've got enough cash to get them through 2025. So I'm not expecting that in the course of 2 weeks, they're going to be doing a capital raise. So very untimely. Thought I'll take advantage of that high option implied volatility. I'm not going to be in the trade for more than 2 weeks. The bottom fell out. So I've done a lot of these in the past. I would not have any issue doing another one of these. What are the odds that in that 2 week period, they're going to have to do a capital raise? They're minimal. I could have 1 in 100 of these go south on me. And I'll take those odds anytime. It didn't work out. I did close the trade down yesterday for $1.70 loss. Why? Because I didn't like the timing of this news. It's like the stock is just starting to get going. They've got enough money to get them through 2025, and they do a capital raise. Well, they feel like, hey, you know what? We should sell some stock while the going is good. Well, that tells me that they don't feel that the stock is a good value at this price. They don't feel that the stock is going to be able to move higher than this price in quite a while. So let's issue some shares while the stock price is still high. And even though it was only 7% additional shares outstanding, that is why we got this reaction, is because the market's like, hey, these guys don't even like their own stock. They are not believing in this move higher, so let's sell it off. And so you're starting to get some more follow through selling. Trade didn't work out. I would do it again. I don't have any issue with my timing of it and the 2 week period and the price action that I was looking at and the post earnings uh, reaction all told me that this was going to be a pretty decent trade. I just needed to get through 2 weeks. It didn't help me at all that we also had a pretty big drop in the market. So let's take a look at that. We are going to have losers from time to time. It's just part of the game, and you're going to get blindsided by news and information. So when I did my last video, you can see how we're starting to see some resistance here. Going to get into the market in just a minute here on a micro basis, but first we're going to take a look at that daily chart. So in here, we had a gap up to a new relative high and a steady day of selling. This is about a week ago, Thursday. We also had some end of month rebalancing that I believe caused this decline. We've had a huge run up in equities, so funds have to preserve their balance between fixed income and equities. That means they sell stock and they buy bonds. Okay, so there's some rotation out of stocks and a little bit of selling pressure, but mainly off of a gap up to a new relative high. You're oftentimes going to see a gap reversal. And so as that started to gain traction, you started to see some sell programs come in and the market closed on its low. I was not overly concerned with that. And Friday we actually had a nice bounce, so we were able to recapture most of this. But yes, it is a warning sign. So now we start kind of muddling around and we're just moving sideways, which is the price action that I was really expecting to have this week because we had big earnings announcements coming out from Apple and Amazon. Typically, ahead of those major mega cap tech earnings, you're going to see a decent market bid. We also had lots of economic news coming out. ISM manufacturing was a little light. ISM services was good in expansion territory. So ISM services is a little bit more important because 80% of our economic activity is tied to the service sector. So it's a good number. It showed that we are still in economic expansion. We also had ADP came out, very solid number, 324,000 new jobs in the private sector. Initial jobless claims have been coming in very good. So there was no reason to expect that we were going to get a nasty jobs report today. Today, the number came out 180,000, a little bit below the 230,000 that was expected. The problem with the number today, in my opinion, is that hourly wages were up 0.4%, and that is inflationary. It's also the highest input cost for manufacturers, so didn't like that particularly much. And then we've also got a little bit lighter job growth than we've seen recently. So are we starting to see some cracks in the dam? Could we start to see some softening in the jobs numbers? The jobs numbers have been what have been keeping buyers very engaged because with the most progressive rate hikes that we've seen in decades, the market's been very resilient. The job market has still been very, very good. So the threat of an economic collapse because of the higher interest rates has really started to subside. And that's one of the reasons we're seeing such a good market bid. We're also very close to the Fed's end of their tightening cycle. So the Fed is likely to raise rates one more time this year, and then they're going to pause. So really nothing too daunting that was going to be happening this week. We're going to be waiting for those mega cap earnings. After this week, the price action is really going to die down. It's when everybody goes on vacation, so we can expect to see light, choppy price action, tight trading ranges. That's not what happened though. All of a sudden, come in, and Wednesday we've got this big gap down. Uh-oh, I'm not expecting any selling until mid August or later, and I've been kind of mentioning that in my videos. There's a seasonality component. The Fed is in recess, the market gets a little bit nervous, and so you start to see some profit taking. But typically, short sellers are not going to be taking profits ahead of mega cap tech earnings because those are the companies that have been fueling the market rally. So why take that risk that these stocks could have a really big reaction? By the way, Amazon up a lot. We've been trading it today, done very well on it. Apple was down. The two really negated each other. One up, one down, so no real big market impact. And the futures were pretty flat this morning before the open, even with that unemployment report. So right now, as far as the market is setting up, yes, the drop came a little bit earlier than expected. What does this debt downgrade mean anyway? I mean, is this something we need to be worried about? No, we really don't need to be worried about it at all. It's going to increase the government's borrowing costs just a tiny, tiny, tiny little bit. But what it did do is that, let's take a look at TLT. This is the US 10-year Treasury. What it did do for treasuries is there's been a big dislocation. Bonds have actually been pricing in a rate cut in Q4. This has been present for many months. And as we get closer and closer to Q4, it's become more and more apparent that the Fed is not going to cut rates. In fact, they might increase rates. So that price disparity had to be resolved. And we could see that even before this week's price action right here, we were starting to see some pretty steady selling in bonds. So now all of a sudden you get this news that Fitch is going to downgrade our debt, and you get this big drop and this big follow through selling yesterday. If we put up the 10 TL now trend lines, you can see these are major breakdowns. And you can see that yes, we had a breakdown here, and now we're starting to bounce back above this downward sloping, and this is a significant trend line. You can see these are very nice touch points here, and this is a very long-term trend line that dates all the way back to March. So this also, you can notice in the chart, we do a little technical analysis, you can see that we have a downward sloping trading channel. Well, when you have a downward sloping trading channel, often you are going to see a selling climax when you break through that low minus trend line. We also had it on a 5-minute basis yesterday, and I pointed it out in the chat room, and I said, this is feeling very much like a selling climax. There's your downward sloping trend line visually. You can see it. We broke down below it right here, and then we had a bullish engulfing candle off of that low. And I had pointed this out in the chat room, and I said on a 5-minute basis, I think the bonds are going to start to put in support here, but it's too early for us to call a selling climax on a daily chart. For that, we would need to see a rally back above this line, and we have it. Why are interest rates going up? Well, it's not because the Fed's going to start aggressively tightening again. It's not because inflation is off the rails again. We've actually seen inflation start to abate. So that's a good thing. This is simply adjusting and getting the bond prices in line with where they need to be, because they've been pricing in a quarter point rate cut or more in Q4. The opposite's going to happen. We could see a rate increase. So they needed to get that in line, and as soon as Fitch downgraded our debt, we saw this big drop. That also caused a big drop in the S&P, but it's not going to have a lasting impact. So what do we need to be careful of? I'm going to be taking time off, so I'm going to tell you the different things that I'll be watching for in the market right now. And we're going to zoom in a little bit here, take a look at this price action. So now that we've got a kink in the armor, it came a little bit earlier than expected. Tech stocks have given back the most because they've run up the most. I think that's where you'll see the biggest vulnerability. There are two possible scenarios, and I'll tell you which I believe is more likely to happen. One scenario is that the market has pulled back and you have a downward sloping trend line that is breached to the upside. That would form a bullish flag. What might that look like? There's your flagpole. There's your pullback. Everything looks soft, 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 soft. Look, we're retracing, and then boom, you get another leg higher. The other possibility is that the market tries to rally back and tries to rally back to this high that we saw, and it's repelled before it gets there. That would be a double top, lower high, and that is going to signal that this resistance level that has been forming is probably going to be intact for a while. And given that we tend to see some seasonality and some weakness in August and September, this could be what sellers are looking for. This would be their sign to take profits. Is there anything super daunting out there? Is there a credit crisis looming? No, I can't really say that. I don't believe that that's a threat. Kind of that window has passed and we haven't heard any other rumblings. The stress test came in really well, so that's not a big issue for me. Valuations are a little bit stretched, so that is a bit of a problem. I think the market's also going to get nervous on the notion that the Fed could hike rates in September. So you get this lower high double top, and then the market starts to roll over a little bit and you start to see some profit taking. But until you have a nice big drop, I wouldn't worry too much about it. But it tells you that now, on a day trading basis, if we do have that double top lower high, you can have a mixed basket of longs and shorts that you're trading during the course of the day. You're going to start seeing, if it's more substantial selling pressure, you're going to start running some of your bearish searches and you're going to notice that, hey, you know what? I'm seeing nice orderly red candles on my bearish searches, and these moves are sustained. And I'm also seeing some really nice technical breakdowns, some trendline breakdowns on the daily charts. These are some nice moves, and it's not herky-jerky, mixed overlapping candles. It's when that move starts in, you see nice follow through in it. And if you are noticing more stocks that are looking good on a short basis than long stocks, then it kind of tells you that the market conditions are starting to soften. So that can change from day to day as far as what you're looking for in day trades. Instead of only looking to buy dips on strong stocks, now all of a sudden with a lower high double top, you would have a more balanced approach. You'd be fairly market neutral and you'd think, you know, I can make a case now for bullish or bearish trades during the course of the day. We're still really not moving, so we're in this sideways range. Then if we get a nice crackdown, and this is going to take more than a week to unfold. So I'm only going to be out next week, but I'm giving you what I'll be looking for later in the month of August. Then if you start to get this lower high double top and a crackdown, a long red candle closing below technical support, then I would definitely take notice. And only then, if we close below it on heavy volume, would I start to consider some shorter term swing trades. Until then, this has been a very strong bullish market. Bull markets die hard. And that's why I've been telling members this week, okay, we're throwing a curveball, flat out, we're throwing a curveball. Nobody expected Fitch to lower our debt rating. And that sparked a lot of selling in bonds. So it sparked a drop in the market, and bullish sentiment has been very high. So there's some bullish speculators who are taking some heat and getting flushed out in here. But don't worry, because all of these buyers, all in here, are they just going to throw in the towel? Are they all of a sudden just going to decide, that's it, I'm done? No, they're going to come back in because buy the dip, buy the dip, buy the dip, buy the dip. They've been conditioned to buy the dip. Why? Because it works. And the market has a tendency to continue existing patterns. So now you want to see this pattern continue, and we could make a higher high, and the market could continue to go up. As I mentioned, this could be a bullish flag formation. I think that's less likely because of the selling pressure we've seen recently. So I'll be looking for that lower high double top and then ka-chunk, a nice red candle. I don't know what's going to spark that type of selling. I'm simply going to be watching for it. What's kind of my first level of support that I would be really leaning on that would tell me, yeah, this thing could go down now? Well, I'm going to put up the AV-WAP Q that starts at the beginning of the quarter, and you can see that that comes into play around 455.60, 455.67 to be exact. That's the number, and that's the level. So you get a little move higher, higher, higher. Okay, double top. Now we've got a balanced day trading approach, some longs, some shorts, whatever way the market seems to be favoring that day. And then you get a nice long red candle through that price point. Then yes, you can justify starting to take some bearish swing trades. Does it mean that you have to buy out of the money puts and look for a move all the way down to these trend lines? I wouldn't get that progressive with it because this rally has been so strong. The price action is telling us the dips have been minor. The retracement has been minor. That tells us that buyers are engaged. How can you say that, Pete? How do you know if buyers are engaged or not? Because every time that there's a little dip in the market, buyers replenish the bid and the market goes higher. That tells me that their conviction is very, very strong. When you start seeing long green candle, long red candle, long green candle, long red candle, that tells you that the price action is very balanced. And that's what we saw a year ago on the way down when the market was selling off. Lots of uncertainty. You're not seeing that right now. And you're seeing these pockets of really nice volume as the market is moving higher. So there's no reason for me to believe that the bottom is going to fall out of this market. So instead, when you start to see that type of price action early on, you start selling some out of the money call credit spreads on stocks that are weak relative to the market, stocks that have broken technical support. Again, that's if we are below this AV-WAP-Q. Okay, now you're starting to see some heavier selling pressure mount, and you start breaking this upward sloping trend line. Then you can start to get more aggressive. Then you can actually start to buy some in the money puts looking for follow through selling. I'm not calling for that. I need to see the price action. I need to see that confirmation before I start doing anything like that. Until I see really heavy selling, I'm going to be leaning on this very bullish price action. So I'm going to show you a few longs. I'm going to show you a few shorts today. Again, you're going to really need to watch what the market's doing. If it breaks out, you're going to be favoring the long side. If it breaks down, you're going to be favoring the short side. We don't need to do anything outrageous here because the news is going to dry up. Not going to see a lot of it. That means the volume's not going to be there. Traders are going to be taking time off. So assume fairly dull price action. Let's take a look and see what we got on the long side, see what we got on the short side. So I'm going to go in, take a look at a few searches. We're going to get the trend lines off of our chart, and we'll see if we can find a couple of trades. Amazon, I loved it. So let's talk about Amazon and what was it that told me that this was going to be such a good trade today. Well, first of all, it's a post-earnings play. We had a really nice breakout through horizontal resistance. So that's good. Let's take a look at that 5-minute chart on the market, and we'll see what that was doing. And so early today, we come in and we clear the high from yesterday with ease. Mind you, we've had selling pressure earlier this week. So buyers are going to be looking for any signs of support. And right now, we are actually getting a breakout here to a new high of the day. I believe I'd mentioned to you a few minutes ago, we want to hold this breakout. And now we're actually starting to add to it. So I'm fairly bullish in here. I like this price action. If I were in the chat room right now, I'd be telling everyone to get long, so maybe I'll take a minute to do that. So now we've got this beautiful breakout, but we had some nervous jitters. We had this long red candle, long red candle, long red candle. In here, the temptation is to think, uh-oh, I've seen this before. You get your little head fake gap up, and now we got these stacked long red candles, and the market is going to sell off. This is a gap reversal. Market didn't like that news at all on the jobs report. Little early head fake to suck everybody in, break through the prior day's high. Oh, it looks good. Now we get these long candles. Well, my commentary was we need to wait to see what the heck happens here because we've got a bullish 1OP cross right in here. So let's not be too anxious. We want to see what this bounce produces. Well, then all of a sudden we see long green candle, long green candle. We're above the open of this key bar. I said, yeah, this is a decent bounce. And even early on, right in here was the tell. We didn't have the volume. So this is just jousting between buyers and sellers. They're trying to figure out what way is this thing going to go. Been trying to figure that out all week. Had more selling pressure than buying pressure. Finally found some support yesterday. And so now we're starting to see that same jousting in here. And there's really nothing going on. It sells off. It rallies back. This is a nice entry point for longs, but would I have aggressively gotten long in here? No. We had a nice breakout. We're back above the high from yesterday. Okay, yeah, in here is where you can start considering some longs. We've got a bullish 1OP cross, and there's decent support in here. We see these red candles erased immediately. So then what we want to do is, okay, looks like the bottom's not going to fall out today. Let's find the strongest stock. Well, we start looking at Amazon and many other stocks. What attracted me to Amazon is this price action early on. So you've got this gap up. The initial temptation is going to be whap, 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 whap. Sell that stock. Take those profits. This is a big gap up. Let's knock that thing right back down. Well, when sellers can't knock the stock down, it tells you that the bid is fairly strong. It was not able to re-enter this gap at all. And then you get this market drop. So let's put up an overlay of the SPY. It'll be easier for you to see. And the gray line is the SPY. That's your tell right there. This is the system that we trade. Market tanks. stock preserves all of its gains after a big gap up and after an earnings announcement. That tells us buyers want in. And right here, the stock was at about 141.60. And I told members in the chat room, I said, look at Amazon. This stock is going to go. It wants to go. You need to be long Amazon. I'm going to buy the lottery. Those are options that expire today. I'm going to buy the 141, 142 call debit spread. And I'm going to pay 50 cents for it. The stock is already 60 cents in the money. This thing's trading for 50 cents. If I get any little push higher, I'll be able to sell it for 75 cents. And I'll make a 50% profit in 30 minutes. And that's exactly what happened. I didn't hesitate to take gains on it. Like if one little whiff in the market, and we've got this choppy price action that we've seen so far today. When we start getting into this territory here, do I know if we're going to break out or maybe we're going to sell off and stay in the range? I don't know. I don't have a good read on the market, and I don't have any volume that I can lean on. So that tells me that I have to err on the side of caution. A 50% gain in 30 minutes is nothing to sneeze at, so I'm going to take it. And then I'll reevaluate Amazon and I'll see if another trade sets up during the course of the day. So that's how you have to play it. And right now, when you get this kind of choppy light volume price action, you have to be in hit and run mode. Take what the market is giving you and don't look back. Only look for those strongest chart patterns. And in Amazon, we had tick, tick, tick higher first. This was the big tell that it was going to go higher because buyers couldn't get enough. As the market's pulling in, they can see that the stock is rising, so they have to get more and more aggressive. They keep raising their bids. So as the market's falling, sellers are trying to nail it, and they're realizing that they're getting better and better prices. What do sellers do? What would you do if you saw that you were trying to hit bids and the bids were increasing? Would you maybe think that, hey, maybe I could get a better price for it? So they start lifting their offers, going, okay, well, if you guys want it that badly, I'm going to offer some higher here. I'm going to offer some higher here. I'll offer some higher here. By the time you get here, you're thinking, gosh, you know what? We're making a new high of the day. Maybe I don't want to sell any right now. I'll wait to see just how high this thing is going to go. There's a lot of buying pressure. So they start lifting their offers, and buyers have to pay more and more for it. What are buyers thinking? They're in here going, man, this market drop has given us a great chance to buy some of this stock. We want to load up. We don't care what the market's doing today. We're buying this stock for the next year, 2 years, 3 years out. So I don't care what the 5-minute chart on the market looks like. Buy, 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 buy. Oh, crud. There are other buyers joining me. I can't get my trades off because there are other buyers out there. So raise the bid, get more aggressive, get it all done. Just get it done. And then you got that kind of lift off. That's where you get consistent price action from that type of movement. And it's because these aren't just green and red boxes on a chart. They are telling you what the heck buyers and sellers are doing. So when you get nice orderly price action like that, it tells you buyers are in control. When you have tiny little retracements like this, they're still in there buying. You can see how the stock is still compressing near its high of the day. Will Amazon continue to power higher? This is such a big move for a mega cap tech stock. I don't know that it's got much more gas left in the tank. You can see this is the market breakout right here. The stock is creeping higher, but it's not, we're starting to lose some of that big momentum. So I would probably be looking elsewhere. I do like the price action in Amazon today, and I expect this gap to be preserved based on what I see. But that move for me, pretty much done. So we're going to take a look at other stocks. The reason I highlighted it was to really help you understand the price action that we're looking for. And we're going to have a choppy grind higher today. We should not expect that we're in go-go, gotta have it mode where we're going to start stacking long green candles. Well, why shouldn't I expect that? Because that's not what's been happening all day today. Every rally is challenged, challenged. Okay, couldn't knock it down. Now the buyers come back. There we go. Next leg higher. Challenged, challenged. It's going to be a choppy grind higher, and we have to be careful near the close because this is happening on light volume. Big drop early. You can see how the market rebounded, tiny little bodied candles, lots of bid checks along the way. So the higher we float, eventually late in the day, if we start to see a bullish 1OP cross, I would be pretty careful, especially if the market is not able to make nice advances. Why? Because we've seen selling pressure early in the day. We've seen selling pressure on the D1 chart recently. So the sellers are not just going to throw in the towel either. They're not going to go away. Yes, buyers are still here as well. So we're seeing that two-sided price action. Watch for that lower high double top and then a red candle after it. And if you see it and it's fairly substantial and decent volume, that means that you can sell some out of the money call credit spreads, especially if we get through that 445.60 level that I had referenced earlier. If we blow out through the top end of this range, very unlikely, but if we happen to, well, then you've got to respect the breakout, and we could possibly have a bit of a buying climax late in August, as opposed to a big drop. Again, I'm not looking for that. I don't believe we're going to have that, but I'm mindful that this is kind of an inflection point. We either get that bullish flag or we get that double top. So you want to be careful trading the next week, especially as the volume dries up. So let's just find a couple of stocks that we might be able to day trade for now. I'll show you a couple of good chart patterns that I like, and then we'll kind of call it a day, and we'll see how all this plays out a week from now. So going to go in, take a look at, this is pretty nice price action, OLED. We're going to focus on that daily chart, and we're going to also remove that SPY overlay. Nice horizontal breakout. That's all good. Very, very choppy stock. And you can see how the stock has broken out previously, downward sloping trend line, long green candle, everything looks great, and then it kind of fizzles out. So I'm going to keep looking at green royal flush and see what else we can come up with. See if there's anything that looks really attractive to us on the long side. Z, choppy stock, broke through this horizontal resistance, stacked some nice candles today, but it is just as choppy as can be. So I'm going to continue to go down the list and see if there is anything that I like on the long side. I do like energy stocks, but you do not have to rush into them. They did not discover a cure for cancer. They sell oil. There's no reason to chase these stocks because it's choppy as heck. But I do like this little breakout here that we have through horizontal resistance. And I'm going to put up the major moving averages. We'll see where they come into play. And you can see that we are right at that 200-day moving average. So yes, if XOM can clear that 200-day moving average, I would like it here. I would also like a test of that 100-day moving average where it holds. That's right where the breakout is. So I can right click. I know I don't have to chase this stock. I can go in on an M30 basis, strong versus SPY. Great, I would be a willing buyer there. I want an alert when I get that. And then instead of buying it up here, I can buy it down here. And then as it starts to grind, grind, grind higher, I can see if it now has enough strength to break out through that 200-day moving average as well, and then I can continue to hang on to it. But my entry point is excellent, and I am not chasing the stock in a nowhere market. Very, very important concept. So, yeah, I like the way that that trade is setting up, and I like the fact that it's able to push through some of these resistance levels right now. So, yeah, please give me that chance while I'm waiting for that alert to trigger. I can evaluate what the market's doing. Did it put in a double top lower high? Got to be a little bit more careful with that. Did it break out through this resistance? Are we making a new 52-week high? Then I can take that trade with confidence, knowing that the stock has a good market tailwind. If I'm waiting for that alert to be triggered and I get a long red bearish engulfing candle, I know I've got to be super careful because that is a sign of heavy selling pressure at the 200-day moving average. So how the stock dips before that alert is triggered is critically important. Maybe I should just spend time and talk about this because it's a chart and it's a question that came up in the chat room yesterday. And I had a member, I do like W, by the way. I kind of like this daily chart because this is a pretty substantial breakout right in here. The chart looks like a W. That's why I like it so much. I'm just kidding. Uh, this is a horizontal breakout. I'm getting punchy. My brain is partially on vacation right now, so I do like this breakout through horizontal resistance here. On a longer term basis, you can see that the stock does have plenty of upside to it. This is a nice bottoming process. I think that the stock is probably going to hold up well. So let's see if this breakout holds. But here's the difference on a 5-minute chart. And we had a couple of stocks that we were trading yesterday, so let me spend a little bit of time on that. When you come in and you see that this company has announced earnings and you've got this big earnings gap up, what you'll notice is that there's instant retracement. Okay, now the stock starts to rally, but there's lots of overlap here. Do you see how that entire candle was retraced? That's when we got this long tail here. And so it barely gets going, and then we've got this nice substantial dip in here. Well, this is a warning sign that this is a volatile, choppy stock. Barely gets going, and then whap, we get a nice big dip in here. So as you start to get up to the top of the range here, and you're looking for an opportunity to buy a dip, what you want to see is the stock pretty much just compressing, compressing, compressing near that high of the day, maybe pulling back a little bit to the VWAP, but what you don't want to see on these dips that you are looking to buy is you do not want to see stacked red candles that are orderly. So how the stock got to this high is important. Big pullback, lots of overlap, big wicks, big tails, choppy, tiny, tiny, tiny little candles compressing, compressing, compressing. That means there are sellers up here. There is some selling pressure, and we know that from this price action. So now you get this pullback. This is not good. This is not the type of dip that I want to buy because we pulled back too far from the high. Well, so what? It just means that I'm going to be able to buy the stock cheaper if it pulls back a lot, Pete, because I can see that the stock is strong here. That's not the mentality that you want. The mentality that you want is buy, 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 buy. Not gonna let this stock retrace because I gotta have some shares. I'm an asset manager. I want to own this thing for the next 2 or 3 years. If they're in there buying, you are not going to get a big dip like that. So that's the tell. The stock that we were long yesterday traded the heck out of and did very well with. You can see today it's weak, but yesterday, this is the kind of relentless price action that we want to see. Just smoking higher. Hardly any retracement into these long green candles. So they're just aggressively buying. Get a little bit of a pullback here and then another leg higher. all of this taking place in a go nowhere market. So I hope this technical analysis has helped you a bit. So I'm going to highlight a couple of stocks that I know have been coming up in the chat room. I can't recall which searches they're on. I need to kind of move this along. SQ had a really nice looking bearish chart to it because you can see there's your upward sloping trend line. Earnings after the close. Today it blew through the 200-day moving average, blew through the 100-day moving average. Relatively weak. Take off those major moving averages for a second and then take a look at where the trend lines come into play. Uh, we, we've got one visually that we can draw right in here. The others are right up here at the top, but this is a substantial breakdown. And so now what you'd be looking for is a market that's trying to inch higher, puts in that double top lower high, and then you're looking for the stock to try and recover, but it just can't get there. So very stubborn price action to the upside, market looking like it's going to put in a lower high double top. Then you can start considering, especially if this 100-day moving average provides resistance, that would preserve half of this long red candle. You know you've got some sellers in here because they did not like that number. And so now can't get through the 100-day moving average, can't get back half of this long red candle. You got the 200-day moving average to provide additional resistance. This is a nice opportunity to sell an out of the money bearish call spread, keying off of that 67.50 price. So if you can sell a 67.50 $70 call credit spread and bring in 50 cents for that or more, I think that's a trade that you could put on with maybe 2 weeks of life, 3 weeks of life. Keep it as short term as you can. I like that trade, generating a nice return and taking advantage of what is likely to be dull market conditions and a possible lower high double top. There's another stock that I've been watching that I think is going to set up for a good short. Travel and leisure has been relatively weak recently. And so what we have is a lower high double top here. And we've got a little bit of a wedge formation coming into play here. But you can see that even with the market moving higher yesterday and today, not so much yesterday, but today, this stock is not able to get off the deck. If this trend line is breached, it's got plenty of downside. I like it. I think this is going to work out well, but it has to, you've got to have that market top, and you want to see a long red candle closing on its low, perhaps down to the 1720 level or the low from today, which was 1722. You want to see that crackdown, and then I think you're going to have a nice short that you can swing. I was looking at Tesla. I think Tesla's looking a little bit weak in here. So let's bring that up. I know everybody likes to trade Tesla. You can see how it had this negative, this bearish drop right in here post earnings. And there's your earnings right there after the close. So it has this drop, and now the stock has not been able to recover. Even when the market was up, 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 right in here, this stock was not able to even challenge that 20-day moving average. On a day like today, when the market is up, what's the stock doing? Are you seeing a big rally in it? No. Actually, Tesla's been pretty weak today. So how would you trade Tesla? Well, you can if you've got continued relative weakness and you have a double top lower high with a confirmed red candle coming off of it. Okay, well now I can start considering selling an out of the money call credit spread on Tesla, perhaps keying off of the 275 level, sell the 275, buy the 280 call, do that for a $1 credit. I think that represents a nice risk return and the potential for the stock to break down and even maybe present us with a nice day trading opportunity. But it's got to get below that 50-day moving average. Once it does that, you might see it break through this trend line as well. And then it's got kind of a clean path down to the 100-day moving average. Stocks that have run up the most are going to see the heaviest selling on the backside. So there's a couple of bearish stocks that I like. And I also liked Exxon on the long side. Keep it light. Let's see what happens. You're going to have very light volume through the course of the next 2, perhaps 3 weeks. Are we going to get that double top, or are we going to break out and continue to rally in August? We don't know yet. Let's see which of the two happens. Trade well, keep it light. We'll see you in a week. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.